Hi, welcome to Slay the Spider. I'm Jim B, and I'm the creator and host of Slay the Spider. Shares of the S&P 500 are called S&P Depository Receipts, SPDRs. Spiders. Slay the Spider means I intend to beat the S&P 500 quite substantially. In the last week of November, we saw a double top form in the S&P 500. It began on the 15th and ended on the 25th. It's the fourth one we've seen in 2022. Here are the previous three double tops this year. The first was over the New Year's holiday, finishing on January 4th, and was the start of this bear market. Over the next 13 days, the market was open. The S&P lost 12.5%. The second double top was February 2nd to the 9th. Over the next 10 days, the market was open. The S&P lost 10.5%. The third double top formed May 27th through June 7th. Over the next 8 days, the market was open. The S&P lost 13.25%. The fourth double top was completed Friday, November 25th, and I think this will possibly be the beginning of a final leg down in this bear market. At least I hope so. The reason I say that is because the stocks leading down on Monday and Tuesday are the biggest heavyweights out there. According to NASDAQ, as of December 5th, of the 50 largest companies by market cap, 29, 60%, still have current price-to-earnings ratios above 25. Now keep in mind, this is in an environment of rising interest rates, inflation, and expectations on Wall Street of the S&P 500's earnings dropping 11% in 2023 from 2022 earnings. Those big heavyweights, the blue chip stocks, because of their financial strength, are always the last to tumble and get hammered in a bear market. It's a little too early to assume it's indeed the last leg down, nor can we assume it's going to be as quick as the last three. Why? It could be quick because in the next 2 weeks we will have both Consumer Price Index and Producer Price Index inflation reports, and a Fed meeting and a potential rate hike on Wednesday, December 14th. But with the way crude has been falling because of the COVID shutdowns in China and China canceling all its oil orders from the Middle East, which is why crude's been dropping so quickly, those might be positive factors. But the shutdowns are also causing major unrest in China. They had violent protests last week. On the negative side, the big tech layoffs are not a good sign for the holiday season. Imagine Amazon laying off nearly 20% of their employees, or nearly 20,000 employees, 6 weeks before Christmas. Unbelievable. Also, in the stock markets, it's time for investors, and particularly institutional investors, to sell losers and harvest tax savings. There's plenty of losers to sell yet this year. Finally, if the holiday season is not as healthy as last year, earnings reporting season starts in mid-January, and that may cause the final leg down to happen in late January. For the week ending December 2nd, the markets had a peak week. In healthcare, biomedical, healthcare, and drugs all advanced. In media communications, internet stocks advanced, telephones were unchanged, and media declined. In technology, semiconductors were unchanged, and software advanced. On the bear side, electronics declined, and computers advanced. In consumer discretionary, restaurants, leisure, gaming, and household products all advanced. On the bear side, autos advanced. Retail was unchanged. In the financials, on the bull side, banks, savings and loans, and finance were all unchanged. Insurance advanced. On the bear side, Wall Street and real estate both advanced. In the industrials, steel, aero defense, waste management advanced. Machinery tools declined. Building products and chemicals were unchanged. On the bear side, metals advanced. In the others group, oil and protection and safety were unchanged. Oil services and forest products declined. On the bear side, transports and textiles were unchanged. Gas utilities advanced, crossed to the bull side, then declined. Business products, precious metals, foods, and electric utilities all advanced. For the week ending November 18th, December 2nd, there were 11 sectors that were unchanged. 22 sectors advanced, 7 sectors declined. One sector crossed from the bear side to the bull side. There's now 24 on the bull side and 16 on the bear side. For the week ending on December 2nd, the S&P 500 closed at 4072, up 46 for the week, or 1.13%. The Dow Jones Industrial Average closed at 34,430, up 83 points for the week, or just under 0.25%. NASDAQ closed at 11,461, up 235, or 2.09%. This week, 140 stocks went from sell signals to buy signals, so there was one new issue. And 42% of stocks are now on buy signals and 58% are on sell signals. Overall, the market score last week was 39. This week, it's 44. For the first 48 weeks of 2022, the S&P 500 is down 15.5%. NASDAQ is down 27.9%. And energy is up 63.7% year to date and is by far the best performing sector. Also for the first 48 weeks of 2022, healthcare is down 1.04% for the entire year. Media communications is the worst performing sector, down 33.3%. Technology stocks have lost 21.7%. Consumer discretionary stocks are down 28.5%. The financial stocks are down 8%. The industrials have lost 3.84% year to date. Real estate's down 24.4%, and basic materials are down 8.6%. For the past week, the S&P 500 was up 1.6%, and NASDAQ gained 2.4%. Energy sector was up 1.1%. Healthcare stocks for the week gained 1.9%. Media communication stocks were the best performing sector, up 3.6%. Technology stocks were up 2.1% for the week. Consumer discretionary stocks gained 2.1% as well. The finance sector was the worst performing sector, losing 0.3% for the week. The industrials gained 1.6%. Real estate stocks gained 0.7%. And the best performing sector, or nearly the best, was basic materials, up 2.6%. For the week ending December 2nd, the 10-year Treasury bond yields ended at 3.506%, down 19 basis points for the past week. For the week ending December 2nd, West Texas Intermediate crude oil closed at $79.25 $8.98, up 370 or 4.9% this week. For the past 3 months, WTI is down $6.89 or 7.9%. Wholesale gasoline, RBOB, closed at $2.28, down 4.8 cents or 2.05% this week. The 3-month change is down 12 cents or just shy of 5%. Year to date, RBOB opened the year at $2.24. It's now $2.33. So it's up 1.8% year to date. For the past week, ending December 2nd, natural gas closed at $6.28.1, down 74.3 cents or 10.5% this week. The 3-month change is down $2.50 or 28.5% for the past 3 months. Year to date, natural gas is up from $3.70 to $6.28, up 69.8% for the year. Here's a Biden era chart comparing crude oil, wholesale gasoline, natural gas, and 10-year Treasury bond yields. Crude is up 46%. Gasoline, wholesale gasoline is up 48%. Natural gas is up 176%. And the 10-year bond yields are up more than 242% since Biden's inauguration. Both crude and wholesale gasoline prices are below where it was the day of the Russian invasion by close to 20%. Subscriptions are available for $12 a month on an annual contract or $15 a month on a month-to-month contract. I've been producing the Slay the Spider Circle since 1998 and using it to manage private client assets. I've been nearly completely out of stocks for the past year. My portfolio performance is now well ahead of the S&P 500 and NASDAQ indices since I went into cash. That's the total idea behind Slay the Spider. Outperform the indexes in both up and down markets. Now is an excellent example of cash beating the market substantially. I'm looking forward to buying many of the stocks I owned previously at prices well below what I sold them for last year. I will then own more shares going forward, in some cases twice as many. Sure, there were a few stocks I wish I had kept, but in total, I'm more than happy avoiding this bear market.